Good morning, traders. I'm Michael Sabo, Senior Market Strategist here with RJO Futures on February 24th, bringing you some commentary here in the energy markets. And before I get started here, I want to bring your attention here to our 2014 Energies Outlook. This is a great piece for those of you that are interested in trading energies or are currently in the energy markets. Give me a call, shoot me an email. Be more than happy to get this sent over to you as a PDF file, or I can also mail you a hard copy if you prefer. But really great piece. It's about 20 pages long. It's packed with information. It covers the oil market, the complex, both your RBOB and the distillates, which is your heating oil, as well as natural gas. And, it gives a nice historical perspective on the markets. Many charts that go back in there over a 10-year time period, and kind of goes into some detail, and obviously gives you an outlook here for what we're anticipating, potential for things to happen in each of those markets here for 2014. So go ahead, give me a call, shoot me an email here, get your hands on this guide or this outlook here. It's a nice white paper. Excellent read. I think you'll really enjoy it. So we also have them in some of the other markets as well, the metals here and the agricultural. So if you have interest in other ones, also let me know and I can get you those as well. So now let's jump in here to crude oil prices. What do we got going on? Well, crude price is a little bit firmer here this morning. We're up about 90 cents here so far, trading around 103.10. Brent also a little firmer, up about 63 cents, trading around 110.48. We've really seen that spread, the WTI Brent spread, really narrow. It's been kind of, I think, stabilizing here around the 750 area. So I've got some ideas. If you're interested in possibly playing this spread, give me a call and I can go over that with you. I think there could be some opportunity there. Looking at the March Nat gas, which is ready to come off the board here, but I want to point out there here, a lot of volatility in natural gas. Today, we're off about 38 cents. Big move. It's down about 6% there. So we've seen a lot of volatility in the front month. I don't think it's going away anytime soon. So, you want to hear about some ideas there, give me a call. Complex, looking at the April contract there. We're firmer. We're up about a penny a half each one there, so a little bit of a firmer tone there. But I got to tell you here, you look at the way the complex has been here, especially the heating oil, and we really haven't seen it follow suit with what we've seen so far in the oil market. So the complex here might start to damper some of this rally that's been going on here in the oil. And you look at oil here, and oil prices have been very, very firm here. Last 6 weeks, crude oil has rallied up about $11 a barrel. Now we recently seen, today here, we're seeing the S&P kind of hit new highs. I think that's been helping kind of drag things a little bit firmer. We've seen a renewed interest, it seems, in a lot of commodities. So we've really seen some buying pressure coming in there. But you know what? I think when we look at the overall stockpiles for oil, I don't think it warrants here necessarily trading around this $103 a barrel. Now, granted, though, the market is up. But I do have some ideas on how you could take advantage of this here. I think a great way to play the oil market here right now, for those of you that don't want to sell basically a bull market, which is what we've seen here recently, some great option strategies. And I encourage you, if you're interested in playing that market, to give me a call and get into a little bit more detail. I think a great way to play that right now is through bear put ratio spreads, and I can go into some detail and give you some strike prices on what to look at. The fundamental news out there, again, I think stockpiles are ample. I think S&P's helping drive it up a little bit. There's some news coming out of Libya, one of the oil fields there that they were kind of shutting down, but I don't think it warrants, and certainly I don't think that's been responsible for what we've seen here over the last 6 weeks, help taking the market up. Short-term technical indicators, very overbought up at these levels. But as I'd mentioned in posts before, just because the short-term technical indicators are showing the market very overbought, the overall chart patterns here, are in a bullish formation. The market can still continue to go here for a little bit. And so that's one of the things you got to be cautious for as traders. And if you're not quite familiar with what I'm talking about, give me a call and get into a little bit more detail. I mean, some of the chart patterns have been still remaining a little bit bullish, but I do believe that the market is getting ripe for a potential sell-off, and I think the market could possibly be moving into around the mid to upper 90s. So there's potential there to take advantage of a nice move here to the downside. But like anything, you got to use the right strategy. You got to use proper risk management techniques, and that's where I can come into play and kind of help you with those things. And of course, keep in mind that futures trading does involve a substantial amount of risk. May not be suitable for all traders. Good luck and good trading.